Hello everyone, this is Keerthana, Assistant Professor, Department of Commerce. So today we can see a lecture series on the subject Direct Tax Law and Practice on the topic Income from House Property. Actually, income from house property is an head, like income from salaries, like income from individuals. So in upcoming videos we can see let out and self-occupied house. So now we can see what is income from house property. So this will help to key head of income under Income Tax Act. So this will show about rental income, other property related earnings are taxed, providing clarity for both homeowners and investors. So we can see the constitutes, legal basis, types of house property, computation of house property and deduction and allowance, important consideration and exemptions, example and case studies, common pitfalls and how to avoid them, and also key aways. So these are all the agenda. First we can see what is house property income. So income from house property refers to earnings generated from the ownership of any building or land attached to it. So this can include a variety of structure provided the owner doesn't use the property for their own business or profession. Next is scope of income. So residential home and apartments, commercial office and retail shops, warehouse and industrial spaces, and apartment land and like garages and gardens. So house property income is earning generated from the ownership of any building or land attached. So this can include a variety of structure provided the owner doesn't use the property for their own business or profession. So why this head is important? So income from house property is crucial for taxpayer due to its direct impact on their overall tax liability. So it provides specific rules for calculating taxable income and allows for various deductions which can significantly reduce the tax burden. So we have tax planning, compliance and investment insights. So while coming to tax planning, it allows strategic financial planning through deductions like interest on home loan and standard deductions. So while coming to compliance, it ensures accurate reporting of rental income and avoids penalty for non-compliance with tax laws. So while coming to investment highlights, it helps property owners and potential investors to understand the net return from real estate investments. So what is deemed ownership? So in certain scenarios, even if you are not the legal owner, you may be the deemed an owner for tax purposes. So this prevents tax evasion through property transfers. For example, property transferred to spouse without adequate consideration or to a minor child excluding a married daughter. So members of a cooperative society or association of persons to whom a building has been allotted are also for deemed owners. Next, types of house property for tax purposes. So first is self-occupied property, let-out property and deemed let-out property. So for self-occupied and let-out property, we'll see the clear definition in the future videos. So used by the owner for personal residence and its annual value will be treated as nil for tax purposes through deductions on interest paid for housing loan are still available subject to limits. So while let-out property that is rented out to tenants, the actual rental income is received for taxable after accounting for various permissible deductions. And in deemed let-out property, if an individual owns more than one self-occupied property, only one can be treated as self-occupied. The others are deemed to be let out and a notional rent is considered as taxable income. So we can see the computation of income from house property. So these all have seen in our problems, right? So gross annual value, net annual value, deducting the municipal rental values and what are the deductions under the Act of 24. So gross annual is the higher of actual rent is received or reasonable expected rent based on the municipal rental value, fair rental value and standard rent. And while coming to net annual value, then GAV minus municipal taxes will be paid. And deducting the municipal taxes will be paid by the owner during the previous year. And under the deductions of section 24, standard deduction is 30% of national and net annual value for repair maintenance regardless for actual expenses. So while coming to interest or borrowed capital, full interest for let out property limits apply for self-occupied properties. So these are the key deductions and allowances. So this deduction is available for loan taken for purchase, construction, repair, renewal or reconstruction of the property. So in end of the session, owner is the key. Taxability hinges on ownership, whether direct or deemed or co-ownership. And property use matters includes distinction between self-occupied, let out, deemed let out determines the tax treatment. And while coming to deductions reduce liability, leverage the standard deduction and interest on borrowed capital to lower your taxable income. So this let out property and self-occupied property will be seen in the next video. So just take over this points will be helpful for the future videos. Hope the video was useful and thank you.